Hello and welcome to Money Talks COVID-19 Daily Bulletin for Friday, April 3rd. My name is Anthony Okolia. In a few minutes, we'll be speaking with Michael O'Brien, Managing Director and Portfolio Manager at TD Asset Management, about the latest development in the oil market. But first, a quick wrap of today's market news. U.S. companies shed a massive 701,000 jobs in March, and the unemployment rate jumped to 4.4% from 3.5% in February. It was the largest one-month increase since January 1995. Keep in mind, the jobs data doesn't yet fully reflect the 10 million Americans that filed for unemployment insurance in the last 2 weeks of March. Oil prices jumped for a second day in a row, up more than 10% today, on hopes that an agreement on production cuts will soon be reached. OPEC and its allies announced they will meet Monday after Russia said they are open to production cuts to reduce the oil glut and lift depressed prices. The number of coronavirus cases globally sits at more than 1 million. In Canada, the number of cases climbed above 11,000 and 138 deaths. Meanwhile, Ottawa has signed a distribution deal with Amazon Canada to distribute supplies across the country. And as coronavirus cases continue to rise in the US, President Trump ordered medical supply from 3M to stop selling US-made N95 respirators to Canada and Latin American markets. Trump also invoked the Defense Production Act in order to speed up the distribution of masks to US states in need. Finally, according to Google Trends, good news searches is at an all-time high. And as the world battles the coronavirus pandemic and lockdowns are extended, we can all do with some good news. And that's a wrap of today's market news. As promised, Ask Money Talk with Michael O'Brien on the oil sector. Michael, yesterday oil prices had a great day. Today they're up again. We now know that OPEC is calling an emergency meeting on Monday. Does it look like we could have a deal, and do we have any details?
So yes, things are looking a lot more encouraging at the moment than they have been in quite some time. The words leaking out of the back room appear to be that OPEC Plus is going to try to come to an agreement where they'll try to share the burden of the production cuts, not just across the core OPEC members, not just across the Russians and some of the others in the OPEC Plus group, but also I think they want to bring in some of the non-OPEC Plus countries as well to share this burden, like Canadian and American and Brazilian producers as well.
Of course, until we get a deal, it's still just rumor. But what will it take to get a deal, and what kind of concessions need to be made in order to get that deal?
Well, I think everybody's going to want to get something, and everybody's going to need to give something. So clearly, the Saudis drew a line in the sand here, and they're tired of carrying the burden of production cutbacks themselves. So clearly, they want better participation among the other cartel members and the Russians in particular. For the Russians' part, clearly there's an element where they were tired of restraining their own industry production only to see American shale producers increasing production. So they're clearly going to want to see some of that burden extended potentially to the US and Canadian production side of things. And there's also a geopolitical element as well, where I think, the Russians at the highest levels, including Putin, were, quite irked by the American use of sanctions against a number of Russian companies, including Rosneft, which is their flagship company or flagship oil producer. So, there might have to be some give and take there as well to reach a deal.
And if we do get a deal, history has shown that someone always cheats and the whole thing falls apart. Do you think there's a risk of that happening again this time?
Well, that's not my biggest concern at the moment, Anthony. I think, we're in the middle of a near-death experience for all the large industry stakeholders, whether it's the sovereign countries themselves, the regimes, or, the major oil producers. I think everybody realizes just how dire the situation is. So if there was ever a time to expect, the different parties to honor their agreements, I think this would be the time.
And if there is a deal, how big a production are we talking about? And will it be large enough to sort of offset the demand destruction that we've seen caused by COVID-19?
Well, the numbers coming, or the numbers that are being thrown around in the media are that we could expect something in the order of 10 million barrels a day of production cutbacks, which is a significant number. This is in a global oil market of 100 million barrels a day. So that, this 10 million barrels per day would be a very real and very important first step. The problem right now is with the coronavirus basically shutting down the global economy. There's been an enormous amount of demand destruction on the other side of this. So, depending on which number you look at, there are estimates anywhere from 10 million to 20 million to as high as 30 million barrels a day of oil demand that's been pushed offline here. So this would be a necessary first step to reining in the damage, but certainly not the whole picture. So the way I would frame it up is the key differentiator between oil in the mid-teens and oil at $30 is in OPEC Plus's control. The difference between oil at $30 and oil at $50, where the better producers can earn a reasonable return, is very much about the global economy getting rebooted, which in turn is directly related to getting the coronavirus under wraps.
And I want to talk a little bit about oil prices because even if we do get a bounce, oil is still in the mid 20s. Western Canadian Select is just trading above $10 a barrel, still well below break even. Do you expect more volatility in oil prices?
Absolutely. This is going to be a very rocky process. First of all, there is no guarantee that we're going to get to a deal. A lot of the preconditions are in place, and it's good that all the different parties are in active conversation. But there's no guarantee that this gets to the finish line. And then beyond that, I mean, even more pressing is just this issue of how long is the global economy going to be shut down? If you can believe it, at this point in time, half the world's population is under stay-at-home orders, 4 billion people. So until we have better visibility on how long this state of affairs is going to persist and just how long and how deep the damage is going to be on the economic side, it's really hard to get our heads around the proper price for oil in that type of a context.
And just in a few seconds we have, clearly companies in this sector have been beaten down, to say the least. What's your investment strategy for this sector?
Well, I don't think this is time to be a hero, Anthony. I think what we really want to focus on is, given that we don't know how long this is going to last, and given how little we know about how deep the valley is going to be here, I think what we really want to focus on are those best of breed companies that we have, the highest degree of confidence that they're going to survive this very difficult period and be left to, resume their operations relatively unscathed when the situation gets a little bit brighter. So avoid the ones that could potentially be the casualties, and there will definitely be casualties going through this period. Focus on best of breed.
Michael, thank you very much for your insights.
You're welcome, Anthony.
And thank you for joining us. My name is Anthony Okolia. Please join us again soon and stay safe.